South Carolina voters are heading to the polls tomorrow for the state's Republican primary. Former President Donald Trump holds a wide lead against Nikki Haley. He's expected to win the vote, with his next challenge being a rematch against President Joe Biden. If he once again wins the top job, what would that look like for the economy? Citi strategists have been looking into a Trump 2.0 economy. And Dirk Willer, one of the authors of the report, is joining us now. Hey, Dirk, thanks so much for being here. Man, I was reading through your report, and there are still so many questions and unknowns. That was the thing that really struck me here, is there are so many different scenarios that could play out between now and the election, and then after the election, right? Depending on whether we get a Republican sweep, whether we get a divided House and Senate, who ends up being... So how should investors even be beginning to think about this right now?
Yeah, thank you so much for having me on. It's indeed a fascinating topic that will keep us busy for some time this year. But I think the general way to think about it is that markets start to really care about the elections maybe 3 to 4 months in advance. So right now, we're still more in the process of figuring out the Fed. We're talking about the elections, but we're not really trading the elections. Now, that will change as the elections come closer. And what often happens is the market builds a big risk premium into the equity market, for example, during that period. But then after the election has happened, or even slightly before, a lot of that risk premium disappears again. So the rule of thumb, if you like, to trade an election is actually to get a bit cautious 2 months before, let's say. But then for the full year, you often get still very strong equity markets because the risk premium gets unbound pretty quickly after the election. In terms of topics, what does the market actually care about? You are right. We don't know that much yet. There are many outcomes. What I would say is it's very important whether it's a sweep from either side, actually, or not. Because if we do get a red sweep, for example, then the market might get quite nervous on very aggressive fiscal policy again. If it's a case of divided government, treasuries tend to do a lot better than when it's a unified government. And that's true for both sides, Republicans or Democrats.
And Dirk, switching gears a bit, I'm interested to get the Citi view on another issue, which is that, we talk, Dirk, as if, that it's Biden and Trump, that it's a done deal. But, I think special counsel Robert Hur raised new questions about Biden. I think with Trump, most Americans have probably lost count of the number of trials. What's the Citi view there? I mean, in terms of your team, do you believe it's a done deal? It's Trump and Biden. Those are the candidates?
I mean, nothing is ever a done deal, but our base case is indeed Biden versus Trump. I would say, there is sort of a tale where one of the candidates will not be in the final election. And then it depends a lot, actually, when precisely that would happen, when one of the candidates would actually be pulling back. And then it can either be a case where the electoral voters have to decide, or where the vice president will have to step in. So there's a lot of uncertainty also on the timing if something were still to go wrong. But our base case is, yes, it will be a rematch of Biden versus Trump.
And what's interesting to me as well, because your team looked at key policy implications of one presidency versus the other, specifically with regard to the economy. What struck me is there were some significant similarities between the two candidates on things like healthcare and on energy policy. It seems like on foreign policy, particularly with regard to China, even though posture-wise, maybe not much would change, there is, of course, the threat of additional tariffs coming from a President Trump. What effect would that have?
Yeah, no, you're right. I think the issues that people worry about with Trump on the negative side when it comes to markets and economic policies, indeed, most of the tariffs, and a little bit the geopolitics, which could also, of course, play very much into market reactions. On the tariff side, as you know, President Trump has put out a 10% tariff against almost everyone and a 60% tariff against China. And he even mentioned, maybe 60% might not be enough. So clearly a very, very aggressive policy. And while the Democrats are not exactly China friendly for sure, I don't think you would see these type of headlines out of a Democratic government. So yes, the tariffs, if you remember, 2017 was a very strong year for the market, because we're really riding on the tails of the aggressive tax cuts and the deregulation that the Trump term brought with it. And then the next year was one where really the tariff wars started to take center stage, and the S&P was much more choppy. So the question this time around for the market is, how important will be sort of tax relief and deregulation on the one hand versus, again, tariff conflicts on the other hand? And we do think in the end the S&P will be fine, but it will not be probably a year like 2017, which had just a very strong market because the tariff wars took some time to manifest itself. This time around, we expect to see that a little bit faster. And so still decent equity markets under Trump, but not as strong as during the last term.
And Dirk, whoever is going to win this contest, this election, Dirk, in 2025, they're going to face some big, serious fiscal issues and challenges. Walk us through those, Dirk. What's going to be on their radar, regardless of who's in the White House?
Yeah, as you know, the cuts, the tax cuts from the first term will run out by the end of next year, and then there is a question, to what extent they would be rolled forward. I think if it's not divided government, very likely there will be some fiscal stimulus again, which the Treasury market might not enjoy, and you could see a steepening curve, not necessarily higher yields because you probably have a Fed cutting at that stage, and so you get a steeper curve rather than higher yields per se. But certainly, I think big fiscal stimulus either with a red sweep or with a blue sweep. But in any case, presumably some of these tax cuts will be rolled forward. But for the fiscal discussion, I really think it's almost more important whether it's a unified government versus a divided government rather than whether it's a Democratic or Republican victory. In either case, if there is a unified government, you will see aggressive fiscal policy, and that will not be a good thing for the back end of the US curve.
Dirk, it gets complicated very quickly. Thank you for helping us think through it. Appreciate it.
Thank you very much.